Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Monday, 15th of August, halfway through the month already, 2022. Hope you had a great weekend. We did too. This starts birthday week over here for us. Those of you with wives and girlfriends know what I'm talking about, birthday week. So that begins this week, so that'll be fun. Not my birthday, obviously. You guys get the joke. So equity futures in the red. Interestingly, NASDAQ's down the least of all the major indices in terms of the future indications. A lot of that energy futures getting crushed, down 5% on crude, nat gas down 3%, copper down 2.5%. These moves all follow news out of China, economic data that came in weaker than expected. I think considerably weaker than expected. So much so that the central bank did do a surprise rate cut. As we have stated time and time again, when you take a look at the energy complex, we do have a preference for the natural gas levered names. I think that's going to be the most interesting segment of energy as we head into the fall. We are long Antero, AR, Devon, DVN, and Chesapeake, CHK. But nevertheless, it's going to be an interesting test today for the cyclical areas of the market. You do have the XLI and XME, had both regained their 200-day moving averages. XLI just did so on Friday. We'll see if they can. We'll see what happens. They're both the XLI is going to gap down below its 200-day on the open this morning. The most cyclical areas of the market. In order to have firm belief for those trends to continue upwards, you've got to have some pretty good faith that most of the earnings revisions to the downside have been done. And that part is over. And you are seeing fundamentals bottom, if not now, in the very near term. We'll see. I'm not totally convinced. We are not overweight on the cyclical area when it comes to industrials. Because that's not necessarily our belief over here. We do, at the top end of our holdings list is long vol, med device. We do have some infrastructure plays that benefit from recent legislation that's been passed. Large pharma is another one as well. We've got several names in large pharma that we've talked about quite a few times. Lilly, Merck, Vertex. We've got some AstraZeneca down lower on the holdings list. So I don't know. It's we'll see. This has been the rally that's been defied most. We've pointed out that 433 is a segment that we can hit on the S&P to the upside. That would correspond to the 200-day moving average. So there's two areas two different sources that I've seen that points to 433 as being a potential ceiling to the upside, if in fact we do get there. Big test today for the Russell 2000. That did recapture its 200-day moving average on Friday. It's going to gap below it this morning. Whether it can recapture it today remains to be seen, and we will find out. But yeah, so we got a lot of retail earnings coming out this week. If you do want to take a stab at some names, remember think about it as a market of stocks and not a stock market. Who's reported good earnings? Which management teams had confidence in their ability to execute going forward? Who's talked about supply chain restrictions easing for their company? Those are the kind of names that can still work. I don't think it's going to be a correlation, one going down. If in fact we do roll over here a little bit, I think some stocks are going to continue to do well. So it's kind of our job to figure out which ones those will be. Okay, that is it. Have an awesome week. We will talk to you tomorrow.
for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.